What's gonna happen if the BJP loses in the elections? What's gonna happen if it wins? How will it affect the stock markets, Nifty, and more? Let us understand all this in today's episode of ET Markets Decoder. I'm Neha Vashisht Mahajan. Let's take a look. Global brokerage firm UBS on Monday warned investors of a knee-jerk reaction in the stock market in case of BJP's loss in the ongoing Lok Sabha elections. It added that equity valuations could even test pre-NDA levels in the worst-case scenario. Now, we will be taking a few scenarios to understand how it will pan out in each case, but before that, let's see what UBS said. Premal Kamdar of UBS Securities said that any unexpected outcome will likely be perceived negatively, at least at first, due to political instability and possible policy paralysis weighing on business sentiment and impacting investor confidence. This could trigger knee-jerk reactions in the financial markets in the near term, with equity valuations possibly testing pre-NDA levels. Now, historically speaking, any market fall triggered by election results tends to reverse in the medium to long term as markets and businesses adapt to new government policies. The brokerage has considered 4 election scenarios. So let's start with the first one. In the first scenario, UBS assumes BJP will retain the single party majority. As per the brokerage, in this scene, markets will be confident about policy continuity. However, likelihood of further reforms, including on disinvestment, the land bill and the uniform civil code, could depend on the number of seats won. Overall, financial market sentiment will likely remain positive. Coming to scenario 2, if the BJP fails to retain its single majority but forms a government with the NDA, that is 272 seats plus, then the market could be slightly less confident about policy stability as fiscal consolidation could be slower than envisaged. There could be a mixed impact on the markets, pressure from other political alliances could be there, overall macro stability could persist. Next is scenario 3. In case there is a hung parliament with the NDA failing to get the majority, there could be higher market uncertainty with the potential for prolonged political negotiations. As per UBS, a less decisive government could lead to lags in implementing reforms. There are risks of policy paralysis which could negatively impact financial markets. Coming to the last scenario, which is scenario 4, if there is a change in government with the newly formed coalition India getting the majority, there could be significant market uncertainty with the potential for more abrupt policy changes. As per the brokerage, there are high risks of reversal of some reforms implemented by the NDA. Financial markets could potentially see a sharp knee-jerk reaction due to uncertainty that comes along with the change in government. However, as markets are known to revert to fundamentals, any significant weakness in equities could offer buy-on-dip opportunities. Earlier last week, Bernstein had said if BJP wins 290 plus seats, the market will rally followed by short-term profit booking. Nifty can grow in high single digits or low double digits this year in that case. In a recent interview with ET, PM Modi showed immense confidence in the Indian stock market and his party BJP. He said that BJP could hit record numbers on June 4th and so will the Indian stock markets. The pre-election rally has already seen Nifty hitting all-time record high levels above the 23,000 mark, while Sensex also hit the 76k mark ahead of the elections. Well, that is all for today. Stay tuned to ET Markets for more.